Something interesting is happening in Marin's single-family sales this November, and it's not what the headlines want you to believe. Inventory took its usual holiday dive. Prices looked messy on the surface, and yet more homes actually sold than last year. This is one of those months where the charts look dramatic, but the story underneath is quieter and way more useful if you're buying or selling right now. I'll break down what actually matters, so let's get to it. By the way, I'm Karrie Hill, lawyer turned realtor, 30-year Marin local, and the person who helps you buy or sell here with your sanity and bank account intact. My info is in the link if you need some backup. And if you want my free newsletter that shows exactly which homes closed in Marin and how much they sold above or below list, that's also in the description, and that is data nobody else is handing out. Economic check-in. Before we zoom into Marin, let's talk about what's happening nationally, especially with rental properties, because this matters more than people realize. The U.S. economy is cooling, not crashing. Hiring has softened, and the Federal Reserve cut rates again. But the real plot twist is in the rentals. Apartment supply is now outpacing demand. Vacancies are at a record high, and rents are falling again. This is not what people expected to happen. This oversupply is squeezing multifamily investors and putting downward pressure on rental yields. Translation: owning rental property just got a little less fun and a little more math heavy. What does this mean for Marin single-family homes? Because when rental returns weaken, capital shifts. Some investors pull back, some move into different asset classes, and some buyers who were renters suddenly find the buy versus rent math is changing in their favor. This is one of those quiet economic shifts that doesn't make headlines, but absolutely moves real estate decisions. And hey, if you pick up even one useful nugget here, hit subscribe. It tells YouTube this isn't just me talking to myself about housing charts, and it motivates me to keep putting these out. Thank you. Marin recap, all homes. Now let's zoom out and recap how Marin looks as a whole before we drill into single-family homes. For November, Marin saw 182 homes sold countywide, and more than half of those sold below list price. That tells you exactly where the leverage is sitting right now. Buyers are still paying up for homes that are clean, well-priced, and well-marketed. Everything else is getting price cuts and very quiet open houses. Inventory dropped month to month, which is normal for the holidays, but it's still higher than last year. Days on market ticked up seasonally, yet year-over-year homes actually sold faster. The takeaway is simple. This market rewards realism. If your plan is let's start high and see what happens, the answer is usually a price reduction about a month later. Single-family home charts, November. Let's talk single-family homes in Marin County because this is where things get interesting. On to the charts. Okay, and here we have the expected drop in total homes for sale from 360 down to 242. That represents a drop of 32.8%. Happens all the time at this time of the year. Let's compare it to last year though. Actually up 5.7%. So our inventory is higher this year than it was last year, and that's somewhat meaningful. And then we can see that new listings have dropped again. That's normal. Down 18% compared to last year though. There are more new listings than last year because we are up 9.8% from last year. And that basically shows what we have been feeling here, that inventory is rising. As far as the dark green bars here, which are the homes that sold, that was down 18% from last month. Again, seasonally normal, but up 9.8% from the year before. So more sales than last year. And when you look at the full quarter number for something more relevant, up 5.3%. No, wait, that's 5.5%. And what is going on days on market? Days on market went up from last month to this month, representing an increase of up 7.1%. When you compare it to last year, it is down 4.3%. And when you look at the full quarterly numbers, which I'm sorry are not on this, but I can see them, it still shows that days on market is up 12.8% over last year. Again, softening market, taking longer to sell a house. This number up here, that represents the sale price over the original list price percentage. It did increase from last month to this month. You know, when you look at both these components though, the sale price, okay, well, it sells at whatever it sells at. But the original list price, that is going to move over time. As people know the market's softer, well, they price lower. And so this number can stay, well, really steady, just as you see for the most part, it does stay very steady. Anyway, but looking at that number, that was up 1% from last month, 1% looking at the prior year, and then it's down 1% when you look at the full, more relevant quarterly numbers. And now we're looking at those prices. Let's look at the one that we now know is a little bit less relevant, well, or maybe a lot, which is the average number, because it gets pushed around by luxury whales that I mentioned in my last video that explained all of this. And you can see a big drop here. It's the red line, by the way. It went from this number down here, and I need an arrow, here to here, and what that represented as a average sold price was a decrease of 17.8% compared to this time last year, down 15%, and when looking at the more relevant quarterly numbers, down 1.9%. Sorry, it's not on your sheet, but I can see it. Anyway, I shouldn't say sheet, I should say video. It's not on your video, it's a sheet to me. Okay, but I also said a couple weeks ago that the median number is more statistically relevant, and in that case, this median shows a drop of 13.4% and a drop of 10% when you compare the same month to last month, so that is of interest. And it does show that when you look at the whole quarterly, it actually shows the numbers up 0.4%, so very little, but still up. So if you looked at that video maybe a week ago, you will know that this average number is highly affected by the big luxury whales that sold, and there was one this month. So this number this month was a little bit affected by that, which means that this average number is in reality just a tiny bit lower. And that might have taken the quarterly number, down to a negative. I don't know, didn't run the math, but it's good to know. Stick to the median number, know that that has more value in it, and that is the one that is showing a weaker market this year than last year, which is what we expect, given how things feel out there as an agent. And for our last bit of evidence, we have the price per square foot, which decreased from this $948 a square foot down to $863 a square foot. Please note these are average prices. So do these get pushed around like home sales for average prices? Yeah, I would say they do. But in any event, that represented a decrease of 9% since last month and a decrease of 9.7% when you compare it to this time last year. And the number you can't see on the screen is the full quarter, and that has a decrease of 3.4% on price per square foot, comparing the same quarter this year to the same quarter last year. So it's a real decrease. If these price numbers feel confusing, don't miss the video I dropped last week where I showed exactly how a handful of luxury sales can totally distort Marin's averages and when the median actually tells the truth. That one will change how you read every Marin headline going forward forever. Next week, we're diving into condos and townhouses where the dynamics are consistently very different. If you're checking out homes for sale in Marin or debating whether it's time to sell, you should see some other video recommendations popping up above me. And don't forget to hit subscribe so you don't miss any of my no fluff Marin County real estate updates. Thank you for watching and have a great day.